right, everyone, here we are with ticker symbol SPX, the S&P 500 index, and we're going to jump in and we're going to break it down and look at the last previous pump dates and see when is the next one, because it did roll out yesterday, and I want to go ahead and pull this out as soon as possible so that everybody's equipped for this coming week. And we're going to look at the S&P 500 index overall and see what it's showing us and what we need to look for as this plays out. So let's go ahead and see here. So the S&P 500 index has been having some trouble staying up in the last couple of months. It was moving itself up all the way, and once it slightly broke, right, when you could see that, our highs before the fall, it slightly broke above it. It has been having trouble staying above it. It comes back down, it comes back up, it looks like it's about to continue, then it falls back down, then it comes back up, and here we are, slightly leveled off. So we're going to look at this closely, and I want to talk about also how we've hit new highs here, and that's some interesting stuff to be aware of, because if we break through those highs, then we're hitting newer highs. But if we don't break through those highs again, it's going to be almost like a cap, basically that point where there has been a rejection there and it's having trouble getting back up there. And that right there won't be a healthy run like we've seen for most of the year. When we look at this, we tend to think that that's how this should work, right? But this is something that takes years to happen, actually. When you see that type of growth, it takes years. If we go ahead and look back at how this was actually growing over time, you could see that, yeah, it was working its way up, but it took almost a year for it to get to where it was going, right? So if we look back here and we go probably to the beginning of the year, it was in the 2400s and it was working its way up and down with the volatility of the market, and it took a couple of months, like another 6 months, to get from those points up to where it's at now. Then it fell, and everything that it took almost 2 years to happen happened within 6 months. And that's something that we need to keep in mind. And a lot of analysts, if you do your research and your due diligence out there, don't quote me on this, but they're saying that there might be a point where this is actually turning in the other direction, like this won't continue. Now, some people say they see here a head and shoulders, and that we're going to continue to break out. Some people are saying that we're getting to numbers that are way too high, and at some point there's going to be a correction. Now, I've noticed that for as long as these pumps continue, whether it's going downwards, because here I have some circled on the way down, on those scheduled dates, the pumps bring the stock up, and on its way up, they do the same. And again here, on its way down, they bring the stock up, whether it's 20 to 40 points, 40 to 80 points, or upwards to 100 points in one day. Yeah, those things do happen. So something I've noticed is for as long as these pumps continue to be scheduled, regardless of the ups and downs, there's an opportunity to go ahead and maximize profits. Now, like I always say, I'm not here to guarantee you profits. I'm not here to tell you to buy, sell, or hold anything in particular. I'm just here to inform you on this information, and the dates and the charts, they speak for themselves. But I just wanted to go ahead and look at this from a broader perspective, right? And look at this outwards to see what is important to keep in mind, that we've hit new highs here. And if we can't break through those highs and there's a rejection, we're going to have some trouble going anywhere further from here. And that's 3645. Just to round it down, 3,645. Super important number for the bulls on the spectrum of the overall market. Now, if we can't break through that cap and that resistance level, we could have a rejection, and then we're going to kind of have some difficulties going upwards, and we might go downwards. Now, I don't know how downwards we can go, but as long as these pumps continue, I mean, they're there to hold up the market. Even on the way down, they kind of stop the stocks from just going straight down, and they also bring the stocks back up. So it kind of attracts more investors. It does its job. When it's bringing it to newer highs, it's awesome because you're basically riding the wave. And when it's bringing it down to newer lows, it kind of just stops it from falling any further and kind of holds it back before it continues going in that direction. So the pumps initially are made for this, and I'm about to show an example. So this is Friday, so we're going to see what's the possibility for Monday. So if Monday kind of just slightly dips and falls and levels off, well, the pump is there to bring this up as much as it can. Either it'll kind of break even around here, or it'll actually level off, or it could actually bring it up to a little bit higher than where we started. Because on Monday it fell, and this is the pump. The pump stops it from going in this direction. That's the sole purpose of the pump. And that's the great news about the pump. It holds up the market from falling faster than it could. So they do that also to not scare investors. They want investors to stay invested, because the only way stocks go higher is because of profits, number one, and the expansion of growth of the company and innovation. And number two, the more investors are in a stock, the more the stock goes up. The value of the stock will go up. So that's one example of Monday. The other example typically is, did it go up and level off? Well, what will happen is the pump will bring up the stock just a little bit more, or the overall market. So this is Monday. We started here, and then we ended up here, and with the pump, it ends up here. And this is just not exact the numbers or anything like that. This is just hypothetically speaking. I'm not speaking directly to these numbers, but in that sense, so that you guys can visualize where it would go and what it's going to look like, it could actually bring itself up, level off, and the pump brings it up a little bit higher. Now, that's another case. But if it does drop, it will drop and then bring itself back up, like I said, because what its sole purpose is there is to level off the market when it slightly falls and bring it back up so it can slightly break even. Even if it doesn't reach up to it, or it even just reaches up to here, instead of allowing, if it ends up here or ends up here, instead of allowing it to continue in this direction, it kind of brings it back up. And then it creates that attractiveness, which the goal is for after the pump, the rest of the week, investors to come and continue to bring it in this direction. Or if it kind of just hangs out sideways instead of just going down in this direction. So that's exactly what these pumps are for. And we're going to see exactly the date of the next pump. I'm speaking about it like I already know, and I haven't explained it to you guys. But yes, Monday is not the pump, and it's actually this Tuesday. And let's look at it right here. So this was actually released on the 13th, which was yesterday. And the first pump is going to be on Tuesday. It says here that there's one at 1:30 and 1:45 through 1:45, 15-minute time frame. I mean, we may see it, and it could affect the market in some way. But usually the Tuesday pumps are the ones you can really see how much more significant they are. But it's showing here the 17th. And this is scheduled all the way until December 11th. So let the pumps ride, right? And they're going to continue to go for a whole nother month. Now, until the 11th, we have pumps, and we're going to see them weekly. I'm going to do weekly videos. So if you're a first-time viewer and investor, I want to say welcome. And to all my subscribers, welcome back. And you guys should stay tuned because I do this series weekly. So our next pump is the 17th. And we're going to look at it in just a moment here. So those were the possibilities. Now I want us to see how the last pump did. So the last pump was on the 10th. And here you could see that it actually hit a low here of 35.12. And it went up to the highs here of 35.57. So when you do the math, that's about 45 points in the S&P 500. And like I always say, that could be in any individual ticker symbol, 30 cents to $3 per share, and sometimes even more. So I advise everybody to do their due diligence, do their research, and just one best advice that I can share with everybody that could help anyone find and do their research a lot more easier and simplified is grab the S&P 500 and grab a ticker symbol. And by doing so, you will be able to see the correlation to the S&P 500, how it's been reacting, and how the individual ticker symbol is reacting to see and make your own rational decisions as investors. So check that out. Do your research. You got 500 ticker symbols to choose from. There's an opportunity to maximize profits and minimize losses. I look forward to seeing your guys' comments down below on what you guys think and what you guys see. And I look forward to hearing what you guys have to share about. Do you think this is going to continue to break newer highs, or is this going to go in the other direction as a lot of analysts and other professionals are stating? I look forward to seeing that. Thank you guys so much for watching, and let's make some money.